Welcome to Foundations for Your Future, the general information program of the Public School Employees Retirement System, also known as PSERS. For many of you, this program will be the starting point in your retirement planning. So if you don't feel you have all of the answers after this meeting, that's normal. There are many other sources of information and additional steps in your planning, which we will discuss. We hope this will be a good introduction to get you acquainted with those steps and the ways in which PSERS is available to assist you along the way. The purpose of this program is to provide information regarding your retirement system to help you better understand the benefits you have as a PSERS member and the important decisions you must make when you retire. Today, we will talk about PSERS. We'll discuss our agency and explain how PSERS retirement benefits work and what's provided for you. Retirement benefit plans and options. We will review the types of retirement plans that PSERS offers. We will also explain how the retirement benefit options work and things to think about as you approach your retirement goals. Achieving milestones. We will tell you about important milestones that may impact your future benefits. Comparing retirement dates. We will show you the importance of comparing retirement dates. Retirement decisions. We will help to prepare you by giving you things to think about as you are making your very important retirement decisions. Retirement checklist. As provided to you in your packets, we will review those things you need to be doing, or at least thinking about, when preparing for retirement. PSERS is a mandatory, cost-sharing, non-ERISA, multiple employer retirement plan to which the public school employers, the Commonwealth, and school employees or members contribute. Depending on your membership class, you may have a defined benefit or DB plan, a defined contribution or DC plan, or a combination of both DB and DC components. PSERS is qualified under Section 401A of the Internal Revenue Service Code and is one of the oldest in the U.S. Established in 1917 and began operations in 1919. Participating employers include all Pennsylvania public school districts, intermediate units, vocational technical or career technology schools, participating charter schools, community colleges, state-owned universities, Pennsylvania State University, and any other employer who offers PSERS as a retirement plan option. PSERS is one of the most complex public pension systems in the country, with 7 membership classes. When you began working for a Pennsylvania public school matters, because your membership class was decided then based on what legislation was in place at the time you first qualified for PSERS membership. Note, charter schools are considered public schools, but not all participate in PSERS. Charter schools may, but are not required to offer PSERS as a retirement option. If not, they must offer an alternate retirement plan. If you are a member of PSERS and begin employment with a charter school, you should verify that the charter school participates in PSERS. State-owned colleges and universities, the Pennsylvania State University, the 14 state-owned universities comprising the state system of higher education colleges, or PASSHE, and community colleges are required to offer PSERS as one of their retirement options. In addition to the mandatory offering of the State Employees Retirement System, or SERS, and PSERS, these employers may offer other retirement programs. Your employer should be able to discuss with you each of the retirement plans that they offer. The defined benefit portion of your retirement is not dependent on the amount of your contributions and investment earnings. Take a look at the pie chart. This illustrates the fund and what it is made up of. Picture it as a pie. Member contributions, employer contributions, and investment earnings make up the general fund from which retirement benefits are paid. Your future retirement benefits are determined by a formula set by state law and guaranteed by the Commonwealth of Pennsylvania. If vested, you are guaranteed a lifetime monthly annuity. The member contribution rate is set by legislation based on your PSERS enrollment date and membership class, which will be discussed shortly. The employer contribution rate changes yearly based on system funding requirements. Earnings from investments are the largest source of funding for PSERS. Class TG and TH members have a defined contribution component in addition to the defined benefit component, which is administered by VOIA. VOIA is a third party that PSERS partners with. Remember we told you that your retirement benefit was based upon a formula? The formula used to calculate your gross retirement benefit takes into consideration your final average salary, your membership class, and your years of credited service. Multiplying the components together gives you the annual maximum single life annuity with no withdrawal of contributions and interest. Your PSERS plan offers options other than the maximum single life annuity with or without withdrawal of contributions and interest, and to retire before normal retirement. The resulting amount, however, is multiplied by a reducing factor to the gross benefit. Retirement reductions are primarily designed to account for the longer period over which you will receive benefits and to maintain the financial stability of the system. By applying a reduction factor for retiring early, choosing an option other than the maximum single life annuity, or withdrawing your contributions and interest, we can ensure that the system has enough resources to cover the payments for all retirees. Final average salary, or FAS. Generally, the final average salary is the average of a member's highest compensation received during any 3 school years, Class TC, TD, TE, or TF, or any 5 school years for Class TG and TH. Included in the calculation of your FAS is any extra compensation for additional duties such as overtime, work as a coach, or department head. Using accrued leave is considered part of your compensation. Payment for your unused leave or bonuses received because of your retiring are not included in the FAS calculation. For school years in which you rendered part-time service, your compensation may be annualized. In other words, it may be calculated as if you worked full-time, applied against the fractional portion of the service you rendered for the school year. As a general rule, annualized RCC, or retirement covered compensation, for a fiscal year during which part-time service was rendered is equal to the RCC for the fiscal year divided by actual school service credit for such year. For terminations before the end of the school year, the partial salary for that year may be used in combination with a proportionate percentage of a prior school year. Membership class. You were enrolled in one of the 6 membership classes based on when you first became eligible for PSERS membership. If you became a qualifying member of PSERS prior to July 1st, 2011, your membership class is either Class TC or Class TD. With Class TC service, the multiplier is 2.0, meaning you get 2% of your final average salary for every year of Class TC service you have. If you are a Class TD member, you have a 2.5% multiplier. So you get 2.5% of your FAS for each year of Class TD service. If you were hired before July 1st, 2001, you had an opportunity to elect to become a Class TD member to get the higher multiplier. If you were hired between July 1st, 2001 and June 30th, 2011, you were automatically enrolled in Class TD. If you were first enrolled on or after July 1st, 2011, you were enrolled in Class TE by default. TE uses the 2% multiplier for all service credit. You had a one-time opportunity to elect Class TF membership, which uses a 2.5% multiplier. If you were first enrolled on or after July 1st, 2019, you were enrolled in Class TG by default and had a one-time opportunity to elect Class TH or DC. Class TG uses the 1.25% multiplier for all service credit. Class TH membership uses a 1% multiplier. This formula does not pertain to you if you elected to participate in the DC only plan. Years of service. Credited service accrual is based on a school year or fiscal year. For example, from July 1st to June 30th. If you are a salaried or per diem employee, 180 days of service is equal to 1 full year of credit. If you are hourly, 1,100 hours is usually the amount needed to reach 1 full year of credit. If you worked less than the 180 days or 1,100 hours in a qualifying school year, you will receive partial credit for that year. Partial year service credit is calculated by dividing the days or hours worked by 180 for days or 1,100 for hours. Please note that you cannot receive credit for more than 1 year of service in any school year. Retirement reductions are primarily designed to account for the longer period over which you will receive benefits and to maintain the financial stability of the system. By applying a reduction factor for retiring early, choosing an option other than the maximum single life annuity, or withdrawing your contributions and interest, we can ensure that the system has enough resources to cover the payments for all retirees. Remember our PI. When you become a member of PSERS, you start to contribute to the fund. Your employer also contributes to the fund. Their current contribution rate is 34%. Your employer is also responsible to report to PSERS how much you are contributing, and they do this on a monthly basis. To be eligible for a regular retirement benefit, you need to be vested. Members who are not vested when they leave public school employment are only eligible to apply for a refund of contributions and interest. The criteria to be vested are different for Class TC and TD members versus Class TE, TF, TG, and TH members. Please review the slide for the vesting criteria for each membership class. Once you are vested in the DB plan, you are eligible for monthly lifetime income upon termination of all public school employment. If you are a Class TC or Class TD member, you become vested when you attain 5 years of qualified service or reach age 62 and then leave employment with at least 1 year of qualified service. If you are a Class TE or a Class TF member, you become vested when you attain 10 years of qualified service or reach age 65 and then leave employment with at least 3 years of qualified service. If you are a Class TG or Class TH member, you become vested when you attain 10 years of qualified service or reach age 67 and then leave employment with at least 3 years of qualified service. Upon becoming vested, your PSERS death benefit increases from the total of your personal contributions and interest to the total value of your account. The total value of your account is an actuarial figure based on the amount of money PSERS would expect to pay you throughout your retirement lifetime. If you are in Class TG, TH, or DC, you will receive all or part of your retirement benefit from the PSERS Defined Contribution Plan, or DC plan. The DC component of your retirement is based on the amount of contributions made by you and your employer, the investment performance on those contributions, and the fees, costs, and expenses deducted from your PSERS DC plan account. Your contributions have the potential to grow based on investment earnings. but are not guaranteed against loss in declining investment markets. Employer contribution rate. Your employer also contributes 2% for Class TH and Class DC, or 2.25% for Class TG to your PSERS DC account. After-tax voluntary contributions. In addition to mandatory contributions, you may voluntarily contribute on an after-tax basis an additional percentage of your retirement-covered compensation to the PSERS DC plan. If you have more than one employer, each employer will make after-tax voluntary contributions based on the same after-tax deferral percentage. After-tax voluntary contributions are post-tax contributions, but enable you to grow assets through earnings that will be tax deferred. Please refer to the special tax notice regarding plan payments available at the Voya website for more information on the federal tax treatment of a distribution from the PSERS DC plan that includes after-tax voluntary contributions. You have access to your DC contributions and earnings, if any, upon terminating public school employment. You will always be 100% vested in and eligible to receive the balance in your PSERS DC plan account that is attributable to your DC participant contributions, your after-tax voluntary contributions, and your rollover contributions. To be vested and eligible to receive your employer's DC contributions in your PSERS DC plan account and the earnings on those contributions, if any, after termination of employment, you must earn 3 eligibility points. A participant earns 1 eligibility point for each fiscal year in which the participant contributes to the PSERS DC plan. A participant earns 1 eligibility point for each fiscal year or 12-month period beginning July 1st in which school service is rendered and the participant makes a DC participant contribution to the PSERS DC plan. Your eligibility points will be displayed on your quarterly financial statements from Voya. An individual who returns to school employment after a period of USERRA or USERRA leave, or who dies while performing USERRA leave, will be given the eligibility points that the individual would have earned had the individual continued in school employment instead of performing USERRA leave. As a PSERS member participating in Class TG, Class TH, or Class DC, you and your employer's DC contributions are automatically invested in a target date investment based on your estimated normal retirement age of 67, as determined by your date of birth. You can remain in your default target date investment or change how all or part of your account balance is invested at any time by accessing your DC account through your PSERS Member Self-Service or MSS account. You can select a different target date investment or choose from among other additional investment options. In addition to mandatory contributions, you may voluntarily contribute on an after-tax basis an additional percentage of your retirement-covered compensation to the PSERS DC plan. You may stop or change the percentage of your after-tax voluntary contributions at any time. Your employer will deduct and remit your after-tax voluntary contributions for deposit in your PSERS DC account. Your employer will determine the amount to remit each pay date by multiplying your elected after-tax percentage times your retirement-covered compensation less your mandatory contributions to PSERS. No part of this amount will be remitted if after all other payroll deductions required by law or elected by you have been taken, you do not have enough pay remaining on that pay date from which to remit the amount. Any amount not contributed will not be made up at a future pay date. We recommend that you, as a member, become familiar with the PSERS website. Our website is filled with information beneficial to all PSERS members. The website includes links to our available publications and forms, as well as our newsletters to keep you up to date with the latest information. PSERS provides you with a generic retirement calculator to help you plan for your retirement throughout your career in the PA public school system. You can access your Member Self-Service or MSS portal account at www.pa.gov/PSERS. We believe it is beneficial for everyone to start thinking about their retirement benefits as early as possible. To assist PSERS members in deciding which membership class is right for them to elect, or those who are already in classes TG, TH, or DC, we promote using the retirement calculator with DC benefits on PSERS public website to see what the different benefit amounts may be when planning to retire. They just need to enter their age, starting annual salary, and the number of years they plan on working. Use of this calculator is not a substitution for retirement counseling with PSERS. This calculator is for anyone with a DC benefit, not just for use at the time of class election. You can access a lot of your personal account information and conduct many transactions securely and quickly for yourself using the PSERS Member Self-Service portal. Setting up an account is easy. You should use a personal email address and will need your PSERS ID, Social Security number, and your date of birth. A PSERS ID is a unique number that has been assigned to each member. Most correspondence from PSERS now includes your PSERS ID. Your PSERS ID can also be mailed to you by contacting PSERS directly. You should regularly check your online account for communications or notifications from PSERS. As you complete more transactions through the MSS portal, PSERS staff can focus more of their time on providing additional value-added services. The PSERS MSS portal offers you secure, convenient, 24/7 access to your pension account information and the ability to stay up to date with PSERS-related news. You can conduct your pension plan-related transactions online and receive email notification when new documents are available for you to review. MSS offers features allowing you to manage and update your personal information, such as phone numbers, email address, and mailing address. You can set your address change to take effect on a future date if you will be living elsewhere for an extended period. Nominate or update beneficiaries. Elect a membership class. Elect multiple service membership. View a summary of your account. Print important documents, such as your statement of account or staff-prepared estimates. Create retirement estimates. Track the status of your retirement application, request for estimate, or refund application. Additionally, after you start receiving monthly benefits via direct deposit, you can electronically update or change your direct deposit information. This slide shows page 1 of the statement of account for Rita Retiree, who is a Class TD member of PSERS. An annual statement of account as of June 30th each year is issued by PSERS to eligible members after their school employer submits all salary and service reports. You may normally expect to receive your statement sometime near the end of the calendar year. Please verify the information on your statement of account. Any corrections must be submitted to PSERS through your school employer. The statement of account is important because it provides you with a statement of wages and service reported to PSERS by your employer, so you can track your progress and work toward your retirement goals. For school year credits or years of service, for salaried or per diem employees, 180 days is equal to 1 year. For hourly employees, 1,100 hours is equal to 1 year. Here, the top image contains information from page 2 of your statement of account. This provides you with an accumulated breakdown of contributions, interest, and service starting with the beginning balances from the previous school year's statement, and including the current school year information, along with any adjustments that were made to your account during the school year. It also includes any purchase of service balances that were billed within that school year. We will explain what a purchase of service is in a future slide. The bottom image reflects the information available on page 3 of your statement of account and will provide you with an estimate of your retirement benefits provided that you are vested. If you are not vested, page 3 of your statement of account will not show monthly amounts. It will show your death prior to retirement amount, which would be equal to your total contributions and interest amount, which is the value of your account prior to being vested. This estimate will give you an idea of what your monthly benefits would be if you retired at the end of that school year under the single life annuities. The statement of account uses an automated calculation that could result in an inflated final average salary. It also provides an estimated normal retirement date and provides you with your death prior to retirement amount, or the full present value of your account. There is an Understanding Your Statement of Account presentation available on the PSERS website, which contains additional information about your statement. Unlike the previous 2 slides, where Rita is a Class TD member of PSERS, those of you who are Class TG or TH members will receive what Rita did, but also receive what we are seeing a sample of here, a summary from PSERS of what you have contributed to the defined contribution account as of June 30th. On the next slides, we will discuss vesting, but DC participants are always vested in their own contributions. To be eligible for the employer contributions, DC participants must reach 3 eligibility points. An eligibility point is different in that they are not incrementally earned like service credits. An eligibility point is earned for each fiscal year in which contributions are made to the DC account.